Hello and welcome to another episode of Monday Markets. As always, we are brought to you by Woo. Links available in the description below, specifically their Q4 update. So if that's of any interest, be sure to check it out. As with any exchange, do not keep any more funds than you need for trading. The whole point of leverage is to allow you to reduce your counterparty risk by not exposing all of your collateral in one place. So with that out of the way, we have quite a move in BTC, over 30k at the time of recording. That looks very good for the first time in a long time. And we'll just work through the timeframes and see what makes sense. So 8 days left until the monthly close. I think in order for this monthly to be unambiguously bullish, I want to see a close through all of the highs, or at the very least through 31k, maybe even the highest high at 31.8. I don't want this close to be wicky or spiky or, wick and reverse. It needs to be really clear, really unambiguous that this entire sort of 6-7 month trading range has been broken to the upside. And so the candle close can't really mess around. I want it to be decisive in order to confer a bullish monthly breakout. And then the monthly targets for that would be conservatively 35k, less conservatively, or the next level will be the pre-breakdown range between 38 to 45. You could even do a mid-range there between 38 and 45 with a 42 midpoint. Obviously looking very far into the future, and we'll deal with that area one level at a time if it makes sense to do so. But I think the only obstacle, or rather the signal that would make sense, is that the monthly close really needs to be clear. In the past, we've struggled with April's high. We've spoken about that before on the channel with these wicks and spikes. So if this month is going to be different, and if this 6-month range is going to break to the upside, the candle close can't leave any space for doubt. So let's hope this coming week grants that premise. Obviously, the logical corollary of that is if the monthly close ends up getting stuffed towards the end of the month, so in the next 8 days, and we get some weakness or something spiky, I will simply assume that the range is still intact, and then we can deal with range midpoint, range low levels accordingly. So that's really all the monthly time frame, all that matters in the monthly time frame for now. The weekly time frame is in a similar spot. The last weekly close wasn't particularly helpful on a closing basis. Obviously, the price action itself was very telling, and we'll see on lower timeframes how aggressive the buying has been. But if you're strictly looking at this on a weekly closing basis, it certainly, that timing-wise just didn't quite work out. We've also had some sort of Sunday price action that made it a bit trickier. But what you want to see for weekly trading systems is basically a faster view of what we discussed on the monthly, which is to say, in the past, we've struggled with April's high on the weekly, just like on the monthly. We had lots of spikes, and, failing to close above April's high has historically been not such a good sign. So on this occasion, with 6 days left on this week, in order for the market to really make the case for strength, it's basically the same as the monthly, right? So weekly range high, this entire consolidation, market's really not got anywhere between 24 and 30 odd, and we want to see clear evidence that this range has broken to the upside. So a weekly close above the extremity, again an unambiguous one, would be welcome, above 31, and then essentially the same targets on the weekly as on the monthly. So that's quite good, right? So we've got the monthly close coming up in about a week. The weekly close coming up in about a week. So rather soon, we should get a very, hopefully, unambiguous high time frame view as to whether this range is broken or not. And as far as weekly expansion targets, 32 is very conservative. If this large range that we've been in for quite some time breaks to the upside, it's hard to believe that resistance just $1,000 higher is going to do its job. The only scenario in which there is resistance or meaningful resistance at 32k is if the breakout fails and turns into a deviation, right? Otherwise, if this is a breakout from a 6-month or whatever this is consolidation, it shouldn't be stopping $1,000 higher. So if the breakout is genuine, 32k should get smoked. And then I would defer to the monthly time frame breakout targets to look for the next relevant area for expansion. Now, obviously, with that context said, which is to say that the monthly is approaching an extremity with targets higher, the weekly time frame is pushing at an extremity with targets higher, but that's all very self-evident. What I don't want to see is the market printing that unambiguous breakout signal and then failing to continue through the range, or even on the closing basis, sort of spiking the highs or wicking in this area and failing to break out. I think all of that would be quite negative, and it would essentially be a mirror image of what we saw at the lows, where down here, or, on the closing basis, however you want to depict the level, I think we had 25.9 on Monday markets. It really looked like the range was done and was going to break on a weekly basis, but that reversal took place at the extremity and we went a lot higher. So what you don't want to see, if you're excited by this price action, understandably, there's a lot of good stuff coming together correlation-wise, narrative-wise, etc. But purely from a technical point of view, what you don't want to see is basically a mirror image of what we had at the range low, which is to say it looks like it's going to break, but then it doesn't, and then it just shoots to the other side. So the equivalent of that would be it looks like it's going to break, and then it doesn't, so weekly closes back below 31k, and then I would expect at least a pullback to the mid-range, if not the range low. So I think that view is shared by both the monthly and the weekly. We are at an extremity, so that's context that's very much worth bearing in mind. But yeah, on a weekly closing basis, excuse me, similar to the monthly, the preferred signal, if you will, would be a clear, unambiguous breakout. That's part one. I'm not going to draw that one, that's way too ugly, but it's a two-part system. Ideally, the candle closes kind of line up with the strength, so remove all ambiguity there, and then the market actually follows through. Anything that gets too stuffy, stuck, or slow at 31, 32k, sort of around these highs, or any spike and reverse things, I think would be quite bad. So that's sort of the theme for the monthly and the weekly timeframes. Unsurprisingly, the daily also mirrors that view to some extent. I mean, the extremity that we're at with April's high is self-evident on lots of timeframes. I think even if you're looking to treat this as a range play and to sell it, which Don would castigate you for, understandably, I think it would be much easier in validation-wise and just setup quality-wise if the market has a final push and just blows out this cluster of highs and sort of accelerates through the liquidity void that would be created, and then, in a quite volatile fashion, just kind of the spike and reverse setup. I think that would improve or increase the odds of this being a failed breakout, and would also, more helpfully, give you some sort of invalidation, at least on the high time frames, to use for this type of thing. I personally wouldn't feel comfortable selling this thing without it giving a final sort of hurrah and spiking the highs, but I think that's a determination that will have to be made on lower time frames. As far as daily timeframe closes and stuff like that, sort of, oh, well, it's been green for so many days in a row, where's the pullback level? I don't really think that there is space for a reasonable pullback level. I think best case scenario for bulls, this thing just breaks, creates a massive liquidity void from just an overwhelming amount of market buys from both breakout buyers and shorts getting liquidated. And then the sell side of the book should be empty, so the market has to keep moving up until those buy orders are filled, and that's how you get big moves. I think that would be the sort of cleanest outcome. As far as selling it, as far as buying it goes, that doesn't really leave much room for pullback levels. At most, I think the only open-mindedness you should have towards pullback levels up here at the extremity is kind of, so how do I phrase this? Either very shallow or post-breakout on lower timeframes. So in terms of very shallow, it's probably going to have to be a matter of lower timeframe market mapping. So perhaps, as we discussed on Casual Friday, some form of the range high at 29k, and you sort of dip and stop out the people with a stop at 29,999, something of that nature. But it's very tricky, and that's the difficulty with these types of lockout trends, where if you, the contradiction that you face is that you may want to pull back from an entry point of view, but if you get the pullback, then the probability of the breakout trade is also reduced. So it's a catch-22. The thing that gives you the entry is also the thing that reduces the probability of a setup. So that's not great. I think if you want to catch a piece of this on the long side, it either has to be some magical breakout trade, hoping that you don't become the wick, or if the market is particularly charitable, sometimes what you get is you have the breakout candle that takes the market beyond the range extremity, right? So you'll have, let's say, a daily close up here, and then the next day ends up being the spiky, scary-looking red pullback day, right? Something like this. Let's say we break out, and then the next daily, break out on the green candle, then the next daily look like this. Often what you'll see is participants arguing, well, either that was the top, or now we're definitely going to pull back to the broken resistance, turn support, and then go up. But what happens instead is the market pulls back in a very shallow fashion, and you either get 1 or 2 days of pullback without reaching the level itself, or you get some sort of micro range formed post-breakout where, for example, instead of giving you the full pullback, it'll give you a very shallow marginal version by spiking previous day's low and then going higher. So something moderate post-breakout or no pullbacks at all and momentum trading seem to be the only two palatable options from a bullish point of view. I think if you're making cases for, oh, just pull back here and then go up, I think at that point you've sort of sacrificed too much for the pullback and the entire momentum trade looks in peril. So either only very shallow pullbacks are permissible as point one, or post-breakout shallow pullbacks, mini range consolidation things, previous day's low, daily opened strategy, all that type of stuff are permissible. And I guess number 3, but I'm not going to talk about it because I'm not very good at it, the 30k breakout trade, and just hope that you're not the wick. I think for bulls, those are your 3 most reasonable options. And as mentioned, on the bearish side, stepping in front of this thing has been quite terrifying. If we look at this on the hourly, for example, I mean, this is very relentless from the lows, very strong. And, all these wicks and what have you, all these shallow dips have been getting bought up, rather aggressively. So it hasn't, even if you've been pinging this thing to the downside off of good levels, the march has been rather unending. So with that in mind, I'll go back to the original point I was trying to make as far as, what do you do if you're bearish? The only scenario under which I could see myself selling this thing is after these highs get blown out and then we get weakness back below 31 to 30k. I think that would make sense. And then the argument that, hey, this was, the equivalent of this, failed breakdown, we went up and we're going to have a failed breakout and then go down. I think that's at least some sort of argument, but the prerequisite for that argument is the highs getting blown out on a final extension. Absent that, I'm finding it quite tricky to come up with bearish ideas that are compelling, although, maybe something changes. I just don't really see it at the moment. So that's BTC. Hope that makes sense. On the ETH front, ETH BTC is still weak. There's not much to say there. I appreciate that it's sort of, it feels like it's reaching an extremity and a range low type of area. But for me, this is almost like a fake level of support, which sounds like a very juvenile thing to say. But from a structural point of view, the way I look at this area in ETH BTC is the level that matters to me is roughly around 0.57. And the way I view it is that that was the true, if you will, range low. Whether you use the wick or the body, 0.57 is where you get it. This portion of price action was the deviation. And then if the market were bullish, it should have found support there again. Instead, we've had closes below. And so this is one of those double fake outs are more rare than not setups taking place, where if the market were bullish, it's already deviated this level once. Doing it twice does not increase the probability of a second deviation, but rather, in my mind at least, increases the probability of a breakout. That's not very helpful. It starts to look okay back above 0.57, but for the time being, I'm treating this as a real breakdown until proven otherwise. So for me, the support is still at 0.57, and this is the deviation portion, and I don't use the deviation portion as support, right? So, for example, if we were to take this from a resistance point of view, if we had a level that looked like this, for example, when, this is whatever price point of whatever asset, and you had resistance there initially, then you had a failed breakout, and then the market broke above it once again. My argument at this juncture wouldn't be that, hey, look, we're at resistance because we're trading back at the high. For me, that high isn't the true level. This is the level that matters, right? This is the actual resistance. This is the top of the deviation. And so closing here means we've broken the actual resistance, and this deviation portion doesn't tend to be as strong a level as the anchor for the range itself, if you will. So applying that to ETH BTC, I think the real level is 0.57, and only back above 057 would start to look somewhat constructive, and I don't consider the deviation portion of 057 to be as compelling as the level itself. That might be complete trite nonsense in your mind. If it is, I apologize, but that's at least how I look at these levels. So nothing particularly interesting on the ETH front, and even if you disagree with me on ETH BTC, at the moment it's still quite hard to make an argument for ETH USD. So, ETH BTC has been downtrending for ages. Arguably, even if you disagree with me, it's been breaking down. That part is unambiguous. I think the downtrend is relatively unambiguous as well. The problem is, even if you completely disregard the ETH BTC analysis, or even have the opposite view that it's bullish, the ETH USD chart is just far less interesting than the BTC chart. While BTC is on the cusp of a multi-month big breakout through a nice round number, or all the narratives in the world, ETF, what have you, ETH USD hasn't even reclaimed 1700 or thereabouts. So BTC is basically trying to break this up here, the range high, which would the equivalent would be 2K or 2.1K. It's really trying to sort of break out of the macro range and make a macro higher high, whereas ETH, having made a lower low, is trying not to make a lower high. So that's quite a big divergence there between the two. And from a technical point of view, it's just not quite there yet. I think if BTC breaks out and keeps going and ETH BTC gets dumped completely, then there might be an interesting early rotation, or at least a mean reversion trade in ETH BTC, where look, hey, we've had the ETF, or we've had whatever catalyst we've had, and now this thing got sold into the ground and is at an interesting level now. Maybe it mean reverts. I think that trade could be interesting, but for the time being, it still feels like the market has a decent amount of juice to squeeze from the ETF narrative. So I don't want to rotate too early, or put risk on ETH at an inopportune moment if a lot of the flows will continue to be Bitcoin centric. As far as ETF deadlines and whether it's a sell the news event type of thing, what have you, I think it's entirely a contextual consideration. So, for example, if we get the big 30K breakout and the market just accelerates and starts hitting 35, 38, 40K, and then the ETF comes out, at around 38, 42, just like monthly resistance on BTC, then I think it's much more likely to be a sell the news event than not. So it's not a binary. My view, at least, isn't binary as the ETF that it's good, therefore buy it. I think if it comes out at resistance after a large rally, I'm going to be inclined to assume that a larger portion of it has been priced in and that the odds skew more towards sell the news than not. Whereas if we get weakness and more range-bound price action and a sentiment shift, and sort of the market forgets about the ETF to some extent and it keeps getting delayed, and we're sort of still ranging or even breaking down, and then the ETF news comes out, I'll happily buy that news. So it's a technical consideration as well as simply a fundamental one. It kind of depends, what have we done and where are we when the news comes out in whatever form it may come. Very briefly on legacy markets first, S&P still looks rough, and so does the NASDAQ. So from a higher time frame point of view, those aren't helpful. Thankfully, whoever's been TWAPing into BTC doesn't care and is insensitive to the correlation. So that's a very welcome development. We discussed this dynamic on Casual Friday, where the argument was that in the short to medium term, if you have enough aggressive flows in crypto, that can override any legacy correlations, or legacy weakness rather, especially if the legacy moves aren't super volatile to the downside, then we can sort of do our own thing for a while. But it would certainly help if these things didn't look like crap. But for the time being, it feels like we can ignore them. Certainly if we break out from 30K, we can ignore them. What would be more concerning is if we fail to break out from 30K and then still legacy looks weak. I think that would be a setup for a good trap. But we'll know in a week or so when the monthly and weekly closes take place. Some altcoins that don't look completely awful. This is my short watch list. Could be interesting for short-term trading, given vol has started to pick up in a few of these. Filecoin also jumps out at 10% up, but I haven't put it up there. The usual proviso, or caveat, if you will, with altcoins is that BTC dominance has been absolute tear. It's an imperfect metric, but gets the point across. So especially if the market has this big 30K breakout and a volatile candle to follow through, it's hard to imagine that, at least in the short term, alts will be able to keep up with BTC. Presumably, the alt BTC pairs will get nuked, and there's creates a bit of a liquidity vacuum. But nonetheless, with that context in mind, some charts that don't look terrible and have been performing well in the last couple of days or so. DOT is one today that's been interesting. I mean, again, contextually, if we zoom out, don't get super distracted. This is, these things are in a mega downtrend. But in the short term, if risk appetite comes back, then we do have to look at what's in front of us. I think on the daily time frame for DOT, if you're trying to be an early momentum bull of sorts, above $4 looks pretty reasonable and trend breaking. At least locally, I'm sure we could draw some trend lines here that make it look palatable. But this is just one of those very nice invalidations that, hey, if you're going to give altcoins a shot, or if you're going to trade one in the short term, which are the altcoins that are A, doing well price-wise, and B, actually have structure that makes sense from an invalidation point of view. And, this range low reclaim on DOT at $4 is interesting. INJ is another one. This is a rather self-explanatory all-time high breakout attempt coin. So that's rather, yeah, I mean, the strength is evidenced by the price action, res ipsa locator. And this is one of those where if the market is strong, it really shouldn't be pulling back to its former highs, all-time highs, the range high. It should just keep going. So if you're looking for a piece of continuation on this, your best bet is to then employ the much lower timeframes, kind of 15-minute to the hourly, maybe even 5-minute on some occasions. And then you basically ignore the breakout level, because if it goes back there, it's bearish. And the way you look to get an entry is either via faster moving low time frame trend tools, like hulls and ribbons and bands and default Binance moving averages, what have you, or you get your short-term price action trading toolkit out and use your normal approach when it comes to levels and support resistance and what have you, but you just have to employ those strategies on much lower timeframes. And also the stuff like the daily open strategy and using previous days high and low are also helpful in that regard. Link is a big one. It was quite scary that Link was leading the market and kind of broke out before BTC broke 30k. If we get stuffed at 30k, it's going to be one of those hindsight commentary signals that, oh, we should have known it was a trap because Link broke out and Link is not supposed to break out, what have you. That's obviously conjecture, but from a technical point of view, this is a big breakout from a big range. I think the similar argument should apply to Link that was stated in the INJ section, that given the magnitude and the length of the consolidation, if this breakout is genuinely bullish, it should have no business, at least in the short term, pulling back to the broken resistance and support. Ideally, momentum should take over and this thing should only offer very shallow pullbacks, if any, before continuing higher. So much like the INJ analysis, I think this is one of those that you simply go onto lower timeframes and mark out your requisite trading ranges and basically forget that the breakout level exists. Because if it goes back there, it's actually a bad sign. If this is a real multi-year breakout, what's it doing retracing all the way a couple of days or even a week later? So oftentimes it's best to just, from a textbook point of view, you might want to do the whole, broken resistance turn support, perfect baby pip century, but the market is rarely that charitable. And if anything, going back there is not a sign of charity, but rather a sign of malice. So instead, you kind of just forget about it, you go on your lower timeframes, and within the context of a high time frame breakout, you look for a low time frame entry if your view is towards momentum continuation, and all the same range stuff, support resistance stuff applies, just on much lower time frames. So between $9 and $11 being the range, $10 and $11 being the range on Link, I think is a reasonable way to navigate this thing. Why did I put Matic here? Has it done something particularly saucy? Yeah, I mean, this is decent enough. I don't really love this coin personally, not that it matters. But similar sort of highest close breakout here on Matic, 60 cents. If the market is strong, it should have no business spending any time retesting the level. If we view this entire consolidation here, this whole period between basically 50 cents and 60 cents, if this breakout is genuine, then it should really accelerate and keep going. So same rules apply. I would on altcoins, sometimes you can give a bit more weight to the breakout levels, just because the liquidity is a bit lower, and it's not uncommon for the market to very quickly retest for like an intraday spike has to be very quick and then shoot up. But I'm still not a fan of the market retesting breakout levels. And the range on this one is also a bit messy. I mean, look at this construction. It's kind of vile, but still it's on the watch list. Daily time frame breakout, I think 60 cents. If you're bullish, is a decent invalidation. It really shouldn't be going back there or sort of trading back inside the range. Obviously, with any of these ideas, if the market turns on a dime and suddenly we get stuffed at 30k and, you know, all of these breakouts start to fail, I think because we're dealing with reasonably well-defined extremities, you can flip bias on these levels and use them as resistance, and the portions that we're seeing now will be the excess or the failed breakout portion. But I think 60 cents is a good inflection point. I've got Phantom on this watch list as well. Very similar argument, you know, long downtrend, but now a local break in market structure, you know, high, low, lower high, lower low, higher high. So if it's bullish, it should just continue. It should have no business pulling back to the breakout level. This one is contextually a bit trickier than some of the others because arguably it's already coming close to its first trouble area at 23 cents. So from there, your options are either momentum trade through 23 and hope you're not the wick/deviation, or as discussed before, intraday lower time frame, very shallow pullbacks that don't retest the origin of the break, but rather just carve out a tradable low time frame range in which to do business. So those are just some of the alts that stood out. But again, to come back full circle, I think the BTC breakout is more important than those things. And I think if it really accelerates and materializes, maybe while I'm speaking, it'll do very well comparatively. Certainly quite likely to do so on the alt BTC pairs. So yeah, that's all I've got. Hopefully that was helpful. If it was, leave a comment, like the video, subscribe to the channel, all that type of stuff. If you still watch Monday Markets, I appreciate you. And thank you to Woo for supporting the show. Be sure to check them out if you're interested in a centralized trading exchange experience. As ever, do not keep any more funds than you need for trading. And I'm going to shut up and let you enjoy the rest of your week. See you for the newsletter tomorrow, trletter.com, and the normal stuff, at least for this week, to come. Thank you. Goodbye.